So what should we expect in the real estate market in 2021 based on what's happening right now? I know it's hard to tell with everything we have going on these days, right? I get it. I've seen so many different markets over the past 36 years, and this one here, it's been one of the more unprecedented and unfamiliar markets since I started in this business nearly 4 decades ago. I'm Don Pelletier with the Don Pelletier Group. So if you look at the index here, the Housing Market Recovery Index, illustrated in this graphic from Realtor.com, you see a V market, which was just as predicted back in March of 2020 when the pandemic started. So the market's recovered and is looking even better now than it did back then. So back in March 2020, we were at 106.5, and now as you can see here, we're at 112.8. Yes, there was a definite dip for a while there when the housing market, when the pandemic began and prices and everything went down for a bit. However, now as you can see, the market dipped and then took a strong and steady rise, and now we're even stronger than we were back at the very beginning of the pandemic. So this analysis you're looking at here, it measures 4 things. 1 being the demand of home buyers wanting to buy. Number 2, it measures supply and demand, or inventory, the number of homes on the market. 3, it also analyzes pricing and whether home prices are they going up or are they going down. And lastly, the Housing Recovery Index measures time on market. A lack of inventory coupled with all-time historical lows in interest rates are, in my opinion, some of the strongest indicators of why we're seeing such an increase in housing activity. There's a lack of supply and high demand because the interest rates, of course, are at an all-time low. Also, if you look at the number of active forbearances, and just to remind you, a forbearance is a deferment of a mortgage payment. So the number of active forbearances has been declining nearly each and every month. Additionally, if we look at homeowners exiting their forbearance plans, you'll see that approximately 54.6 are completely paid in full, 30.7 are working out a repayment plan, and 14.7 are still in trouble. The thing to really be concerned about here is that 14.7%, because they could very well turn into short sales or foreclosures at some point. The market though right now is still hot and buyers are extraordinarily active. So look for more information about the housing market and how it may impact you in my upcoming videos. Don Pelletier here with the Don Pelletier Group, and remember that we're always here for you. So reach out anytime if you've just got a question or you want to connect, or maybe you need an update on your home value just because you're curious, you hear the market's great. And just remember, when you do what you love, people love what you do. So come see us.